Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is July 13th, 2021. Several topics moving markets today we're going to discuss and give you a little bit more in-depth insight as to why and how, and maybe learn something along the way. That's our main mission and goal here. As well as we have relief. You know, it's 120 degrees here where I'm coming to you from Palm Desert, California, but I'm wearing my Colorado Rockies shirt today in honor of the Major League Baseball All Star Game, which is going to happen in Colorado tonight. So let's get right to our topics of the day. So right out of the gate, we have our CPI, Consumer Price Index for the United States for the last month is running hot, up 0.9%, close to 1% rise just in last month alone. This is really impactful as it shows that there are rising prices, right? Inflation is really taking hold. And if you look at year over year, that's a 13-month high, by the way, that we just saw this morning's print on the CPI. And if you look at the year over year inflation, or measured by the CPI, is up 5.4%, which is tremendous because you have the Federal Reserve saying that the inflationary pressures right now are transitory, right? That's their words. And they're very specifically meaning that there's supply constraints, meaning we're turning the economy back on. And if we do that, we're going to have some bottlenecks along the way because if we're a global market, as we are, some countries might not be online. Again, Europe's 6 months behind us as it relates to just about everything COVID, as well as getting their manufacturing going. And so you're going to see too many dollars chasing too few goods and services. Again, we also have now travel related. If you looked at the TSA data of the last week and a half, it's tremendous. We're hitting 2 million travelers a day just through TSA, which shows that the U.S. economy is really reopening, but then you have that supply constraints. And if you look at travel related, that's where you're getting a lot of pressures too, in terms of price increases. Now, again, the Federal Reserve says this is only a moment in time because you have a sort of a spike. You have all these dollars from stimulus, all these dollars from all these sort of assistance to the U.S. consumer that we saw over the last 18 months or so. Now, when people go back out, they're working their way into it. I'm going to get more into this tomorrow. I'm going to invite everyone to go to our mid-year outlook. We have a Zoom call I'm going to be presenting. It's tomorrow, July 14th at 10 a.m. If you happen to miss it, that's Pacific Standard Time, by the way. If you happen to miss it, that's okay, because we will send it out on a replay to all of our clients, friends, and family. But that's a shout out there. But also, let's look at the S&P 500, because this is really going to be the second half approach to what we see and we believe is going to be the major story on a go-forward basis. If you keep in mind, the 10-year Treasury, as I've reported several times, was the show for the first 6 months, and the S&P 500 and all markets are up year to date. The real question is, we know the Federal Reserve at some point in time, we don't know when, it's not an if, it's a when, they're going to have to raise interest rates. But before they do that, they're going to remove the punch bowl and the stimulus, and they're going to let the economy sort of grow on its own. But they're anchoring interest rates low. So the real rate is negative, meaning you have inflation that we're reporting right now, and you have what the bank is actually yielding, all your bank deposits, right? 0.25% in the bank if you're lucky enough to get any money or interest on your money at the bank. Well, if you're getting 0.25%, but inflation's running around 2%, you're getting a negative real rate of return, if you will. Inflation is eating away at your core purchasing power, if you will. And that's really just the basic view of it. And the Federal Reserve is anchoring the 10-year Treasury artificially low, and their bond purchases and a few things. We can get more into it tomorrow. Like I said, I'll invite you to join us. But that at the very basic is what's the issue right now on a go-forward basis. The question is, can the S&P 500, can markets rise all the while we have interest rates rising, because we know interest rates will rise? Well, this morning's research, I actually pulled this report here that shows performance of the S&P 500, and we look back since 1960 when interest rates rose by 150 basis points, okay, so 1.5% over a period of time. And there was 9 periods when that happened from 1960 to today. In each of those 9 periods, the markets were up. The S&P was up, so that's a good sign. And the average was 12.1%. Now, is this predicting on a go-forward basis? Absolutely not, right? But markets do pay attention. We do pay attention to markets of the past because they really give us an indication of what to expect on a go-forward basis. So that is showing that when the S&P still can provide a lift, stocks can provide a lift, even in the face of rising interest rates. And again, tomorrow I'll get more into that in greater depth and detail if you'd like that. Again, don't forget to watch the Phoenix Suns tomorrow night. They're going to be playing Milwaukee. Shout out to all those friends and family back in Milwaukee as well. I know you'll be watching. But tonight is the All Star Game, and we represent Major League Baseball players and a few others, specifically to the Rockies as well at Blanke, Schein Wealth Management. So we're excited. This is a wonderful thing to see sports reopening again. If you watch the home run derby last night, Jack Schein and my son and I watched it last night, and it was something fun because remember, the ball flies a lot further in higher elevations, and so that's what made the home run derby super special last night. We'll see what the All-Star Game brings today, but again, let's just take a break, enjoy our America's favorite pastime as I do. Brings me back to my childhood. So I'll be having hot dogs and hamburgers tonight in the Schein household. Hopefully you guys get to tune into that as well. Thanks again for watching. Again, tune in tomorrow. We're going to go through a whole recap, about an hour Zoom call for our clients. We're going to give you go more in depth to a mid-year outlook for 2021. You guys take care and have a great day.